Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market update. Hope everybody had a beautiful weekend and a great day of trading. And today's markets, guys, well, the bulls continue their march forward and in the process have recaptured a bunch of extremely crucial levels on the SPY and QQQ. So everything is looking very good. The bulls back in full short-term control. Now, in terms of news, well, over the weekend, we did have one very important piece of news, and that was they are finally having some ceasefire talks between Hamas and Israel. Now, the deal is currently underway. Both sides have not agreed to a peace treaty thus forth. However, the talks are underway with Egypt and Qatar trying to broker a peace deal between Hamas and Israel. So that news obviously acting as a very bullish catalyst for the market. In terms of our weekly macro news, guys, well, this is going to be a very light week. Nothing in terms of macro much before Friday when we get consumer sentiment data. So we'll cover that on the channel when it happens on the Friday. This week is largely going to be a tale of earnings. Now, no big earnings in terms of big tech this week, but we do have a few notable participants here. Palantir in the after hours today. We're going to cover their earnings in about a couple of minutes. Then we also have tomorrow Disney, Celsius Holdings, going to be very interesting to take a look at as well. Datadog, one of our another cybersecurity play. And Wednesday is going to be really the biggest day as we have players such as Uber, Shopify, Airbnb, right? Those are going to be some very crucial names to take a look at. So a lot in terms of earnings this week as well. I will be playing a lot of earnings plays just as I have been in the past 2 weeks. So in today's video, guys, we're going to cover those Palantir earnings and see how the company did after their most recent Q1 filings that happened today after the close. Then we're going to take a look at our technical analysis in terms of our full rundown, all the indexes, and then our major big tech names. And lastly, wrap it up with my portfolio and the trades that I made over the course of the day. So without further ado, guys, let's get right into today's video. SPY up 1.03%, QQ up a healthy 1.1%, and the entire market really cooperating to the upside. You can see that best on the heat map, guys. Really everything participating to the upside today. The bulls are very strong and the market is very broad. Only Apple getting slightly left behind, and that is because over the weekend, well, we did have a shareholder meeting from Berkshire Hathaway, and Warren Buffett admitted to selling some Apple stock, more specifically, a ton of Apple stock as a whole. They sold about $20 billion worth of Apple. However, it was not all as it seems, not such that it's not a case that Warren Buffett doesn't believe in the company anymore. He literally justified it by selling for tax reasons. Nothing more, nothing less than that. Still a firm believer in the company, but that headline obviously impacted Apple stock on the day. On the one-day relative performance, you can see that the entire market now in the green. Only the two weaker sectors on the day were real estate and consumer defensives, but they were also in the green. And now on your one-week relative performance, guys, everything is looking very, very good except for energy. And the reason that energy is down here, guys, is because, well, we pretty much hit peak oil a few weeks ago, and now we have been coming consistently down. This should be good for inflation overall. So before we get into more technical analysis, guys, we are going to go over Palantir earnings, and they absolutely crushed it. Despite the fact that their stock is currently down in the after hours by about 6%, they really crushed it on today's earnings, guys. The problem with Palantir, guys, is that leading into these earnings, the company was already up 8% on the day. You can see that right here. So a lot of the pre-earnings move was kind of baked into today's trading. Palantir was only supposed to move about 9% up or down in terms of the expected move, and they really did that before their actual earnings came out. So let's take a look at the numbers here, guys. So Palantir beating on EPS by about 3.5% and coming in with a nice little beat on revenue by about 3% as well. This is now the 6th quarter in a row that Palantir is a profitable company. They are continuously expanding revenue, continuously expanding net margins, and now are finally bolstering some of that juicy free cash flow. So let's take a look at exactly why the stock was down in the after hours. Well, Palantir shares fall 10% on lower than expected guidance. But the guidance, guys, was really not that bad. They literally missed guidance by like 1%, no more than that. Palantir expects second quarter revenue to fall between 649 to 653 million versus the top end of that 653, which was the expectation. So little tiny miss there, guys, barely 1% miss on second quarter revenue. And their full year revenue guidance as well was a tiny little miss. Look how tiny this miss is. Company guided to full year revenue between 2.68 and 2.69 billion, weaker than the consensus of 2.71. That's early a 1% miss, guys, in guidance. Nothing really to be worried about in terms of the stock. And when we go through their investor slides, I will show you how well they are doing. The weaker than expected full year guidance comes despite a solid revenue beat for the first quarter after a remarkable success marketing its artificial intelligence products to government and the private sector. Palantir, obviously, a very, very good company right now, because as we have macro uncertainty, think of everything that's happening in the Middle East. A lot of Palantir's contracts internationally are government and military defense spending contracts. So obviously, in times where tensions across the globe are high in terms of military headlines, well, this company is going to do fairly well. So let's take a look at some of their earnings slides, guys, and you'll see they had a fantastic quarter and their business is really moving full steam ahead. Look at this. U.S. commercial revenue, right? Grew 40% year over year, up to $150 million. A big criticism of Palantir before, up until about 3 quarters ago, was the fact that they only had government contracts. Well, now they are expanding their commercial contracts a lot. Commercial revenue grew 27% to $299 million. That is very, very good. So US is a big part of that, but international revenue coming up as well, giving them an overall commercial revenue growth of 27%. That is very, very good. Revenue grew 21% year over year. They closed 87 deals over $1 million. The U.S. commercial customer count grew 69% year over year. So not only are they getting higher paying clients, they're just getting more clients as a whole. Very, very, very good, guys. Nothing bad to say about this, right? So 6th consecutive quarter of GAAP profitability, 17% margins, very, very good. And adjusted free cash flow of $150 million at 23% margin. That is very, very good for Palantir here, guys. Take a look at Palantir. You can see down here that they never really had a debt problem. Their balance sheet was always very, very solid. The problem was that they weren't generating a ton of cash flow. Now take a look. They are now finally generating consistent cash flow over the last 6 quarters. It's going to allow them to build their cash pile even further and maybe potentially down the line get a little bit of this share dilution down, right? So Palantir had been issuing shares over the past 3 years, but you can see it's not that egregious. Yes, their share count is going slightly higher, but now with the free cash flow, we can really expect that the company doesn't really have to raise any money anymore since they're profitable. So we can really expect this share count to kind of stop dead in its tracks and maybe even come down over the foreseeable next few years as they build more cash and potentially start doing buybacks. Obviously, the company is still in its growth phase, so the buybacks may just be a little bit a ways. Now, take a look, guys, at some of their further data, and you'll see that they're very good. They have a partnership with Oracle as well. Very, very big partnership. They're talking about their boot camps, right? We have completed AIP boot camps with 915 organizations in the United States and around the world. This is something that Palantir does very well. If you guys don't know what boot camps are, is basically Palantir's product is very, very complex to implement for an organization. So what they will do is they host these boot camps whereby if you have a software development team for a company, you can send that team to Palantir's boot camp, which is basically a training process where the company Palantir will teach you how to use their product. And so far, it's been doing very, very good for a lot of companies that choose to send their employees to these boot camps. Look here, we have Dave Jackett here of Supply Chain Digital Transformation. We're saving about 14 million annually, and it's only deployed on a part of our network. And here's the VP of Lowe's. In less than 4 months, we created something from POC all the way to production. Palantir has made us faster and smarter. So General Mills and Lowe's, 2 very, very big companies. Not necessarily, those are commercial companies, right? Very good, very, very good reviews for Palantir as a whole. Here are some of the rest of the numbers. We've already gone over them ever so slightly, guys, but just to show you guys how good this company is doing, right? So many deals closed, so much more commercial revenue. Everything's moving in the right direction for the company. Here is your GAAP net income. So your bottom line, you can see very nice upward trajectory in profits. Right. And if you take a look here, guys, we're going to go down to our revenue growth just to show you guys this on a graph. So commercial revenue growth, U.S. commercial revenue growth, very, very good. Government revenue growth, that is also up, right? U.S. government growth specifically, that is up as well. Really, every single metric for this company is going in the right direction. U.S. commercial customer count, you can see that that is nicely going, growing double digits pretty much every single quarter. Very, very, very good, guys. Nothing bad to see. And here we go. We ended Q1 2024 with $3.6 $3.9 billion in cash and cash equivalents. The balance sheet is extremely solid, guys. Nothing wrong with this company whatsoever. They're doing extremely well. I love this company. It is one of my favorite companies, guys. And here is your adjusted free cash flow. Take a look at your adjusted free cash flow growing pretty much from Q1 2023 to Q1 2024. Well, not tremendously growing, right? It's actually down from Q1, but at least they're positive. If they're always generating between $150 and $200 million in free cash flow per quarter, that is very juicy. And also, guys, their share dilution is actually not that bad. You can see their stock-based compensation of this quarter, only $10 million. That is really not that bad when the company is bringing in, over $600 million in revenue. Very juicy numbers as a whole. In terms of the company's valuation, guys, so everything's moving in the right direction. Revenue's moving in the right direction. EPS expansion is also moving in the right direction. Take a look at this here over the next few years. Gorgeous EPS expansion, gorgeous revenue expansion. So let's take a look at their valuation. You guys know that I've been preaching this stock all the while when it was below $21, 21 down to 19. I was saying that was a juicy spot to pick up Palantir. It was pretty much looking for the monthly higher low for the trend continuation into the high $28. In terms of their valuation here, guys, at the $23 mark, which is currently your after hours price, it is actually not that bad. So their EPS is growing 28% per year through 2027. Very good. That gives them a 2024 forward PE of about 70, which on its own seems like a quite high number. But when we take this PE in relation to their EPS growth per year, it gives them a PEG ratio of 2.5. That's really not that bad for a company that's growing such very aggressively, such as Palantir is, right? Which goes to reiterate, when the stock was down about 10% from its current price, guys, this PE was only pretty much sitting at about 2.25. Really not that bad, guys. If you can get Palantir close to a 2 PEG ratio, that is pretty juicy risk to reward, in my opinion. So love this company. They're doing fantastic things. Very happy with the way their earnings have been performing. And I do expect them to continue to outperform in the next coming quarters as the year advances. So very good for them. So with Palantir earnings out of the way, guys, let's take a quick look into our technical analysis on our major indexes, and then we'll do our big tech names. We're going to go through these quickly, guys, because not much has changed. So now SPY fully back in daily uptrend mode. And what we were saying last week after the Apple earnings, if Apple earnings could get us up and above this big range of congestion, we would have a very good chance at even going a little bit higher. That's exactly what's happening today. So now we're clearly above our range of congestion. This whole area should now be support, 510 all the way down to about 505. Juicy area. And look, all of our major moving averages are there as well. So as soon as this move tops out, just looking for a daily higher low for potential further trend continuation. Obviously now this 510 becomes very big support. The moving averages are there as well. So unless we get some really bad macro news, or unless the Israel-Palestine situation really comes undone, I do think the bulls have a strong chance of maintaining this. And look at your weekly bounce percentage at this point. This is a juicy bounce, guys. We were waiting for the percentage bounce, and now it's almost up to the 78% range. It's going to be excessively difficult for the bears to flush this at this point. The best that the bulls can possibly hope for is obviously the V-shape, and the worst case scenario for the bulls is if we potentially have to two-step this process of weekly uptrend recovery. But everything's looking very good, guys. The fear catalysts are coming off the table one after the other. Last week, Jerome Powell told us that they're not going to hike rates and that they're pleased with the job that they're doing in inflation. They're pleased with the economy, and they're also pleased that the jobs market remains fairly tight. So a lot of fear got taken out of the markets there. And now number two is the geopolitical tensions. If we come to a ceasefire agreement between Israel and Palestine, well, that takes off another big fear catalyst, and it just allows these markets to run a little bit further to the upside. Moving on to QQQ now. Same thing as the SPY, right? So we were in a daily downtrend. We finally got the reversal into the daily uptrend. And now we are back above our big area of congestion, similar to SPY. So 435 down to 428. This green box right here will now be acting as support. We are now above all our short-term moving averages as well. So daily uptrend simply continues, guys. Any pullback, just going to be looking for the higher low for further trend continuation. On the weekly, it's looking very, very healthy as well, right? So we were in the midst of this weekly downtrend that the bulls had set on QQQ, and we were looking for the size of the weekly bounce in relation to that move. Look at the size of this bounce, guys, 78% bounce. So it's going to be excessively difficult for the bears to do this, especially now that we're above our area of congestion. The best that the bulls can hope for is obviously the V-shape back to all-time highs, fully engulfing move, and the worst case scenario could be looking at potentially the two-step recovery process. But all in all, guys, looking very, very strong for the bulls in this moment in time. all of your earnings were good, guys. Financials earnings were very good. Most of your healthcare earnings were very good. Industrial earnings were very good. And big tech earnings, for the most part, were all very, very good. None of these companies have hinted at a potential recession. The only companies that have been struggling so far are your consumer discretionary stocks, right? Think of Nike, think of Starbucks, think of McDonald's. It's normal. They're at a cyclical portion in their journey right now. They eventually will go up. But for now, guys, it is just a question of big tech and your consumer staples, right? More of defensive stocks that are currently really going up in the market right now. Other stocks will have their time, but now is still the environment, guys, where we have to take a look at our favorable trades, right? Our 2024 themes. AI, so semiconductors, big tech, profitable tech, experiences, think travel, casinos, and hotels. Those are also strong. Healthcare and financials, the ones that are tough to trade, will remain tough to trade, guys, until interest rates come down. EVs, solar, unprofitable tech, small caps, consumer discretionary, and China. Although some of them are starting to have a little bit of recovery, guys, still a lot of work left for the bulls to do. Now, moving on to financials right now. So financials trying desperately, guys, to get the daily uptrend back. We have the daily downtrend, nice bounce, looking for the daily higher low, and the trend change. Almost there. A break of 4120 tomorrow would give them the daily uptrend back in their direction. And then we would really be looking, guys, can the bulls do a great job in setting back the weekly uptrend too? We're looking for two things at the same time. Looking for the daily uptrend recapture. And now, so with the way the market's been forming in financials, if we get that break of 4120, we would also recapture the weekly trend change at the same time. And if that is in effect, your monthly higher low is set, and we are simply going to move higher on financials as a whole. So financials doing a very, very, very good job, guys. Still, one of my two favorite financial plays in the market right now is number one is going to be Charles Schwab. Charles Schwab still relatively decently off its all-time highs, even though it has rallied away from my sweet spot of buying. And the other one is more of a fintech company, but it is SoFi. I love this company at the lower levels, guys. Watch out for this one. Could be a very, very juicy play for the remainder of the year, especially when interest rates start coming down. Moving on to healthcare right now. So healthcare also moving healthily, 0.4% to the upside. Healthcare still trying to recapture its daily uptrend, still kind of trapped in this range of consolidation. If we get a break of last Wednesday's high, that will be 142. Well, the daily uptrend would be officially in motion, and then we'll be looking for how much of this weekly move can the bulls take back. As of now, the bounce is fairly weak, but if we do get some continuation, right? Healthcare has been fairly muted. It's been all about the QQQ show in the past couple of weeks. So if healthcare can catch a bid and come up nicely above our moving averages right here, above the 142, well, then we'll be putting some nice space between us and these lows right here. 139.53 sets up for a gorgeous daily uptrend shift and start recapturing more of this weekly move, guys, and potentially put in the two-step weekly recovery, since now we are still caught in the weekly downtrend, right? So looking half decent on healthcare, but still a little bit sluggish. My favorite name in healthcare, I still maintain this, guys. AbbVie still at a tremendous discount right now. And what are we looking for on AbbVie, guys? Breakout, retest of the top end of your all-time high range of consolidation for the potential expansion later on in the year. Looking very good. Now, moving on to semiconductors. Semiconductors, one of our big winners, guys, today. So semiconductors acting very nicely, daily uptrend back in control. We're now back above our range of consolidation. 215 down to 210 was the area that we could not lose. It was previous support. We broke it and now recaptured it to the upside, back above all our moving averages as well. So everything is looking very good. No major earnings still for a while, right? We have Broadcom coming up pretty much. That's only going to be pretty much in June. And the next big one for semiconductors, guys, is going to be NVIDIA, and NVIDIA is only in about 2 weeks time at this point. So really, semiconductors is just every other name, guys, is just performing beautifully. NVIDIA, AMD coming back up, right? Intel not getting tremendous love ever since, but still semiconductors doing very, very well. So now daily uptrend back in control. Any move lower, just going to be looking for the higher low for further trend continuation. And now on the weekly, guys, look at this gorgeous weekly move up. Now recapturing a great percentage of this drop. We are now recapturing 78%. So a lot of our indexes, guys, recapturing 78, 80% of the move gives the bulls the best chance at maybe the entire V-shaped recovery, or at the least the two-step weekly uptrend recovery. Looking very, very solid, guys. Now is the time to be bidding on your favorite stocks that are potentially still getting kept a little bit low. Now, moving on to IWM Russell. Tremendous day by the Russell here, guys. Daily uptrend back in full swing. Any move lower, just going to be looking for a higher low for potential further trend continuation. Now we are back above our big area of resistance, this red box, and all of our moving averages. The red box is our previous support from back here. Resistance, 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 congestion. Now we should be able to try and use this as support and regain this weekly uptrend, right? Still in a loss of the weekly uptrend right now. So the bulls are trying their best to create enough space. The Russell has not taken back as much as the move as other ones, but still taking back 61% on the weekly. So looking very, very juicy, guys, in terms of your Russell trend expansion here. The Russell still, for me, guys, I don't believe it's the best risk to reward trade just yet, right? I know I'm probably being, I know a few of you may think I'm a little bit late on this, guys, but I do really have a theory that this won't fly exponentially truly until we get a better direction, better sense of direction as to when interest rates will be coming down. So that's pretty much it for the Russell. Now, lastly, our Dow Jones. The Dow Jones actually moving very healthy as well, recapturing a crucial level we were watching last week, guys. We're trying to set up the daily trend change, and now we have the daily trend change, right? High, higher low, higher high. Now we're just going to be looking for that higher low. A lot of space for the bulls, anything above 37,800. Just going to be looking for that higher low for further trend continuation. Now we're back above this area right here, 38,500, this yellow line, which is now support, and back above all of our moving averages as well. Looking very good for trend continuation. On the weekly, the bounce is also looking fairly good, but not as good as your SPY and QQQ. The bounce only up about 55-60%, which is decent, but not as good as the SPY and QQQ. However, if the SPY and QQQ continue their march forward, I would not be surprised if the Dow Jones is also going to recapture a lot more of this move, setting up for the potential V-shape or at the least the potential two-step recovery of this weekly uptrend back to the bulls. And your monthlies always look gorgeous, guys. We were always just looking for the monthly higher low for further trend continuation. So all in all, the market's looking very, very healthy right now. Now let's move on to our big tech names, shall we? So Apple coming down about 0.91% because of the fact that over the weekend, Warren Buffett was said to sell Apple stock. But with such a big headline, guys, for Apple to be only down 1% just goes to show you that people are understanding that he did not sell it. He did not sell it for the wrong reasons, right? His reasons for selling it were perfectly natural, taking some money off the table to pay taxes on all the gains that Berkshire Hathaway has made over the past year. So very, very good. It's his largest position, and it still is his larger position, even after trimming $20 billion. So Apple coming down 0.91% on the day, and we were always saying, guys, that as soon as Apple starts its consolidation, we are always just looking for a potential higher low for further trend continuation. Apple looking very healthy. A lot of stocks did this after their earnings, guys. Google did this, right? A couple of others did this as well, but Apple just coming down healthy consolidation. So I'll probably be looking for the top end of this range here, guys, right? 178, 177 could be a very juicy opportunity, guys, for a little bit of a swing trade on Apple, right? The breakout of the range, retest of the top end of this range right here, and the potential run further. Looking very good on Apple, healthy consolidation, well above our moving averages right now. No red flags whatsoever. On the weekly, we are looking at a 100% weekly engulfing move. You can see that right here, fully engulfing the move. So right now, Apple is just trying to reset the weekly uptrend as well above all our weekly moving averages. So the bulls have really done a great job of recapturing two things, the daily uptrend and now potentially also working towards recapturing that weekly uptrend, which is why I really believe, guys, a revisit to the 178, 175 region could be a very nice last opportunity to pick up Apple before we continue marching on higher as the year advances. Looking very, very good. Now moving on to AMD. AMD also looking fairly healthy, 3.44% to the upside. AMD, though, not out of the woods. Still has not had a daily trend change, right? So still in the context right now of this daily downtrend flush. So the bulls are trying to do the daily uptrend recapture. Now, the bulls have done a great little bounce in relation to our most recent downside after earnings, right? We've already recaptured about 65-70% of the move. That is fairly good. So it sets up the bulls either for two things, either the full V-shaped recovery if semiconductors continue being bullish, or similar to the rest of the markets that we've been talking about, the potential two-step recovery. One thing's for sure, we do have a lot of resistance above us, right? So 165 down to about 158. Would not be surprised if we pull up into here. That's where the bulls may take a little bit of a breather, reset lower, and make another attempt at it somewhere down the line in the month of May. All in all, AMD looking like a very good opportunity as well. If we do get a little bit of a pullback like this, could be a nice opportunity for some short puts in this area right here. 141 all the way down to about 133 could be a nice opportunity to get some premium to maybe get into this move to the upside, right? So I'll be looking for the daily higher low. And if we do start getting a little bit of movement to the downside, setting up for that daily higher low, that's when I'm probably going going to be taking some short puts down here. AMD is really trying its best, guys, to consolidate at the lower end, close to our zone of support, and then eventually reverse this into a new weekly uptrend. The bulls, though, still not out of the woods yet, still have to complete step 1, which is your daily trend change, and only then can we look to the size of our weekly move to recapture as well. All in all, AMD looking very good. We've always been looking for the monthly higher low for further trend continuation, guys. So the longer term bulls have always been in control, just a little bit short term selling here since the early part of the month of March. Now moving on to Amazon, give me a quick second. Sorry by the way, guys, I'm a bit sick today, so I apologize if my voice is kind of like raspy or something. But we're going to get through this video just the same. So Amazon having a beautiful day, 1.34% to the upside, almost touching brand new all-time highs. We're almost there, right? So daily uptrend continues at this point. Any move lower, just going to be looking for a daily higher low for further trend continuation. This whole area right here, 181, 182, going to be providing some very juicy support, guys. Not only is it horizontal support, well, previous resistance, horizontal support now, but also all of your moving averages are there as well. So would not be surprised if we can see something like this on Amazon, and Amazon just continue gaining the levels. Really no reason for this stock to slow down after such a phenomenal earnings call that they had, right? Weekly uptrend, still gorgeous. Still gorgeously intact, and the monthly uptrend shows no signs of slowing down either. Monthly higher low was just set. Now we are moving to that monthly uptrend higher. Would not be surprised, guys, if Amazon is marching forward towards the $200 mark in the next month and a half. Looking very, very good. Nothing bad to say about the stock. Any dips currently are continuously for buying. And I'll remind you guys, Amazon's still not that expensive, even at 178. Now, I mean, they're barely what, like 5% higher, right? So you can maybe add to this. Their PEG ratio is maybe a 1.7 right now. Not that expensive for such a juicy company. They are more expensive than Meta, however. Meta still representing some of the best value in the game right now. We're going to get to that in 2 tickers. Now, moving on to Google right now. Google looking very, very healthy as well, right? So any move down after earnings, we were saying it was just for a daily higher low for further trend continuation. And here you go. The bulls are trying for that trend continuation right now, looking very, very good. Where we would get a little bit of red flags if ever we top out here and break these lows at about 164. That would be a daily downtrend, and that would just mean that weekly consolidation is continuing. But there's so much space on the weekly right now, guys. Anything above 132, just gonna be looking for a weekly higher low for further trend continuation. So no red flags with Google whatsoever. Love this stock, and the valuation of Google is not that bad, even though they are at the all-time highs, right? At 177, which was their after earnings price, they were only at about a 1.85 peg. So now they're considerably off that right now by about 5%. So just remove 5% off that. That's about, let's call it about 9, right? 9 cents here. So their peg should be, let's call it about 1.75. Really not that bad for such a phenomenal company. Now moving on to Meta right now. Meta performing beautifully, right? Recapturing a lot of its post-earnings dump. Daily uptrend is well in motion right now. Going to be coming into a few spots of resistance. So your moving averages are right here, 472. And then obviously we have this big horizontal resistance to it about that 480 level. So we could potentially see a little bit of topping out action by Meta here, but any move lower, just going to be for a daily higher low, anything above 426.50, higher low for further trend continuation before we start attacking more and more of this move. Meta putting in a very nice starting of a recovery, guys. I would like to see them get as high as this resistance level, because then that would be a bounce attempt of roughly 60%, guys. And that would set them up very beautifully, guys. If they can't get it done in one clean shot, at least they have a gorgeous opportunity at the 2-step weekly recovery on Meta. Looking fantastic. Any move lower from here, guys, great opportunity to be writing some short puts below your higher low, 430 and below. I know the stock is a little bit expensive, but in my opinion, guys, it represents such a juicy opportunity, especially at, 430, roughly 430, guys. Your PEG ratio is about 1.45, 1.5 barely. Such a juicy entry for such a profitable stock. Now moving on to Microsoft. Microsoft also not looking too bad today, recovering very nicely from last week's sell-off, right? So 1.7% to the upside, 100% engulfing move. So they had the daily downtrend, and now the bulls put in a bounce attempt, 100% bounce. The bulls have now created enough space that if we were to top out in this resistance area, right, top end of the resistance range, about 415, sets them up beautifully to set the higher low and make another attempt for it. That is if we don't just V-shape engulf this right right away and then come on and sit on top of it. So those are the two situations I'm looking for on Microsoft. If we pull back from here, could be a great opportunity to be writing some short puts at the $400 mark. I know, similar to Meta, I know it's expensive, but I think it's a very juicy trade. Even if you want to add to some long-term share positions, this location right here, going for the daily higher low for further trend continuation, could be a very juicy swing trade opportunity for Microsoft. And the best case is if they come up, sit, right? Break out of this area, sit on top of it. This retest zone is another gorgeous opportunity for a trade higher, guys. Microsoft doing very, very good job of recovering the last week's downside and doing a great job at maintaining these weekly lows. No close below this level right here. Just goes to show you Microsoft bulls do not want to give away the levels, looking to continuously march higher. And even on the monthly, guys, the monthly is looking so gorgeous for further trend continuation into the rest of the year. Now moving on to Netflix. Netflix also recovering a large portion of their earnings dump right now. We were kind of getting worried with whether or not this for Netflix was going to be a bear flag with downside continuation, but the bulls kept saying no, triple bottom at the lows. And now, guys, now the daily uptrend is back in motion. So whenever this move tops out, take a look at this level right here. We're coming up on some big resistance, 601, 602, horizontal line of resistance. If we top out there, no biggie. The bulls have tons of space. Anything above 545, just going to be looking to set a daily higher low for further trend continuation. If we can revisit maybe the 572 level, looking for that daily higher low, could be a great opportunity to add some shares to Netflix for the potential trend resumption here and recapture of this weekly trend as well. The weekly bounce is looking good, similar to Meta, right? Almost recapturing 60% of the move. So they have created a lot of space, guys. Would like to see the bulls get a little bit higher and then maybe give us, well, obviously the V-shape is possible, unlikely, but possible. The more plausible scenario is the two-step weekly recovery process. After having lost your weekly lows here, loss of the weekly uptrend, we need to get that weekly uptrend back. Looking very good on the monthly as well. Monthly, just a gorgeous monthly uptrend for Netflix. No red flags for the company whatsoever, guys. In terms of valuation, we went through them on their earnings, right? Valuation, not that bad at 580, which is not far away from our current share price. Only a peg of 1.4. Very, very juicy. So it just goes to show you guys, all of big tech, even though they're at high numbers in terms of share price, we have to look at the valuation as an expression of their growth. And you can see all of them are under a 2 peg, so still relatively cheap. Now moving on to NVIDIA. NVIDIA also putting in some great recovery today. No secret there. Daily uptrend clearly in motion right now. As soon as this move tops out, guys, and if you're looking for moves to top out, just look at a change of the hourly to an hourly downtrend. I keep always say on that on the channel, but if you're new, guys, just look for that. When we look for daily bottoms or daily tops, it's whenever we get a reversal in the hourly trend, whichever direction you're looking at, right? If you're looking for a reversal from the downtrend, we need to see an hourly uptrend back to the bulls. If you're looking for the uptrend to stop, then you need to see hourly reversal by the bulls, right? So as of now, very, very simple. Any move lower just for a higher low, anything above 816, daily higher low for further trend continuation. Now we're back above a bunch of key areas, guys. This 850 zone, big area of support. We're back above that now. Can use it as support. Back above all our moving averages as well. Looking very good. If we do get a dip, it will just be for trend continuation. The weekly is also looking extremely juicy, guys. Never lost the weekly uptrend. Always looking for a weekly higher low compared to here, right? Weekly higher low for further trend continuation. NVIDIA looking very, very good. And on the monthly as well, monthly chart is looking very, very juicy, guys, for monthly continuation. Everything moving in the right direction for NVIDIA. Once again, their earnings only in the next 3 weeks, so we'll have to still wait a considerable amount of time for that. Now, moving on to Tesla. Tesla up a healthy 2% today. Tesla still in its bottoming out process, right? This kind of looks like Google after earnings or even Apple after earnings where they make a significant move up. I know earnings was here, guys, but this is the top of the post-earnings euphoria bullishness, right? This is obviously the Elon Musk in China news. No, everybody knows that by now. Looking for the daily higher low for further trend continuation. So seems as though the daily higher low is in, right? Hourly downtrend, and now we're reversing it. It's slow, but it is now an hourly uptrend. So the bulls really looking to take out this 198.65 and maybe crack our 200 psychological. This whole time, however, we do have very juicy support below us, even if we set a daily downtrend, guys. A lot of support down here, right? Your moving averages are down here as well, and all the way as low as about 170. Huge line of previous horizontal support. On the weekly, what are we looking for, guys? Even if we give away this daily trend and consolidate sideways, that's okay. We're looking to set the weekly higher low to reverse this weekly into an uptrend as well. Big, this whole time has just been one massive weekly downtrend, right? Downtrend, engulfing move. Now it's up to the bulls to reverse this into a new weekly uptrend. Hopefully they can use this 180 to 170 to support them in that process of reversal. But all in all, guys, Tesla not looking too bad at all. Moving on to Palantir now. Palantir, obviously, in the after hours, down about 8.37%, but that's okay. They basically gave up their gains for the day, pretty much ending roughly into Friday's levels. So really no change on Palantir. Would have been nice to see them jump even more in the after hours, but you can't ask too much from a company that's already up 8% on the day, right? So pretty much flat on Palantir. What are we looking for? We had a gorgeous new daily uptrend and now looking to set the daily higher low. Look at where this earnings, I don't know if you can see this blue line right here. We are now sitting on previous support. This $23 horizontal line that's been on the chart for about a month now. Previous support, resistance, resistance. Now we should be able to use it as support. And all of our short-term moving averages are now down below us as support as well. So maybe just looking for the daily higher low for potential continuation of the uptrend. Nothing really bad here on Palantir whatsoever. Phenomenal earnings on the weekly as well, guys, right? Depending how this week finishes too, we were trying for two things. The daily uptrend has been in motion now for about a week and a half, which means that your weekly move higher is underway too. This is 2 weekly legs down. The most recent leg down of selling started here. So we can now see that we have a 100% engulfing move as of today. Now, obviously after hours, we're down significantly, but that will just be a good point for the bulls to be able to set maybe a weekly higher low and go for the weekly trend change. Obviously, weekly downtrend was here. We're trying to reverse that into a weekly downtrend. $23, $22 seems to be a very good location to get that done for the bulls. And on the monthly as well, monthly looking very good. Just looking for the continuation of this monthly uptrend, trying to attack the $28 level, potentially in the next month or two. Everything looking very good for Palantir. Congratulations to all of our bulls. Now moving on to PayPal. PayPal also, PayPal down roughly flat on the day, but not losing any major levels, right? So we had this nice daily uptrend here, and then we got, unfortunately, a daily downtrend, but we are reacting nicely from our moving averages. The short terms are right here. Your longer term, the pink line is the 50, the green line is the 200. So we do have even further support down here, right? What is PayPal looking to do? Because it looks a bit choppy right now, right? Well, what PayPal is looking to do, guys, is the weekly time frame breakout. So I'll remind you, we are trying to set this weekly uptrend in motion. We kind of got a little bit nervous after the earnings right here, and now we're just kind of in consolidation mode. So we're trying desperately to consolidate on the weekly, maybe create a nice little bull flag in this location. And then when PayPal comes out with more bullish news or just gets lifted up as a byproduct of fintech stocks running, well, we need to see the break of 68, guys. If we can get a hard weekly break of 68 in the next few weeks, I truly believe that the next target for this stock is the 75 area. As of now, though, still a little bit muted in terms of performance. Where I get more interested in Palantir, in PayPal, is down here, $63 to $61 to be writing some short puts, because even if we pull back to that location, guys, the bulls are in a longer form process right now of trying to reverse this into a new monthly uptrend. We've not had a confirmed monthly uptrend, guys, since pretty much all the way back here in 2021. So they're starting it. It is slow, but once again, it is going to be PayPal's year of transition period, right? So don't expect any massive things from PayPal. I'm not expecting like a 2-3x from the stock, but they probably can continuously gain in the levels as institutions get more of a favorable view on this stock that's been kind of beaten down very hard over the last 2-3 years. So that's pretty much everything I had for you guys in terms of stocks. Now let's take a look into my portfolio to see the trades that I made today. All right, guys, so taking a look at the portfolio today, another very decent day. Portfolio now up year to date about 15%. We are now well above our indexes. The SPY currently trading around 7.5%, 8% year to date. And the QQQs, we are also above the QQQs. QQQs now year to date performance should be around 8.5% as well. So we're really starting to 2x the indexes, and the positions for today, guys, are looking fairly good as well. We loaded up with a bunch of earnings plays. So last week, we obviously got assigned some SoFi at $7, and I was telling you guys that the covered calls would be fairly juicy. The covered calls, as a matter of fact, were fairly juicy today. I wrote 10 covered calls on my position of 1,000 SoFi shares down here, and we actually got 22 cents for them. That is 3% in a week, guys. Very, very juicy indeed. My average cost for those SoFi shares right now is about $6.80, right? We got about 20 cents on the puts last week when we got assigned, and now we add another 22 cents. So very, very good. Our break even on SoFi now, guys, is around 6.6. Very, very juicy. I'll be looking to ride this one as much as I can. Now, we did write some Palantir puts for earnings as well. So we wrote the 23 contracts of the 21s, got 33 cents for them, and 3 contracts of the 22s. free money in my opinion, guys. That is right around the zone that I was looking for, right? Palantir expected move was about 8% up or down, and that's exactly what they did in the after hours. So we'll be maintaining these through Friday pretty much and see how we go. But if I get a sign on Palantir, really would not be more upset than that. Now, we also had another earnings play. We had SYM, very, very interesting company, guys. So SYM coming out with earnings after the bell, 9.82% to the upside, right? And which contracts did we write? Well, this one actually only has monthly options, no weekly. So we wrote the May 10th. Luckily enough, it's for actually this Friday, funny enough. And we got 20 cents. So very, very good. We wrote 2 contracts of those. Those should be pretty much worthless on the day tomorrow, right? As the stock is now trading around $46. Very juicy trade as well. Same rules applies, guys. We were always going for roughly 2 times, 1.5, 2 times the expected move on these stocks. So if I can pull up the expected move on SYM, can I find it? Maybe this website isn't cooperating right now. My apologies for that. Give me a quick second. Let's try to see if we can pull it up just so you guys can see why I write these things where I do write them. So the expected move, well, that's obviously too much because they moved in after hours. It was not 25%. It was about 10%, okay? So the stock was trading around 41.98 before the close, and we went with 2 times the expected move. We went all the way with the 31 puts, right? So 31 puts would be considerably lower than the current stock price, and 31 is really around our previous area of support down here. So when I can couple a 2 times the expected move with a big area of support, I will take that trade every single time. Looking very good for that position. We also wrote some Apple. So we went with a traditional wheel trade on Apple. I like the dip on Apple. Was a bit early on it, but I did get a fairly okay premium, not quite 0.5%. I got 50 cents for writing the Apple 177.5s. So we'll see how those play out during the week. Would not be opposed to buying Apple. That is the location where I do believe that the bulls stand to put up some good support. We also did some earnings for CELH. So CLH with earnings tomorrow before the bell. So CLH was looking fairly decent for a trade opportunity coming into the close here, guys. CLH was roughly trading around 78.33, and we went with the 62s and 63s. So the expected move on this stock prior to earnings, I'll put it up right now for you guys, just so you guys can see which strikes I'm choosing and why. So the expected move, everything has jumped after the close. I wish I could show you these before the close. The expected move was actually only about 10%. I'm not too sure why it's saying 16 now. It was only about 10%. So we went with twice the expected move, right? Stocks trading there, we went with pretty much, darn close to 21% in terms of drawdown, which is in my big sweet spot that I want these shares. Prior resistance should now be support. The 50 EMAs down there would be a nice area for the stock. So that's why we wrote the 62s and the 63s. And you can see that we got compensated with some juicy premium on those. So looking very, very good indeed, guys. Our average price on those was about, well, they're over here now. We got about 49 cents for the 62s and about 71 cents for the 63s. All in all, looking good. We also went with Crocs. So Crocs went with the 103s. So Crocs currently before the after hours, guys, they were trading around 126. So we went with the 103s. So you can see how deep I'm going with these strikes. This is a consumer discretionary stock, right? We have to be careful with those because we saw what happened with Lululemon, saw what happened with Nike, saw what happened with Starbucks. So you can see, guys, that I wrote pretty much all the way down here. We went with the 103s. So 103s is roughly about 18% off the current share price. Leading into the earnings, the expected move was about 8.5% up or down. I'm not sure if it's going to give us some weird numbers in the after hours again. No, this one's actually right in line with what it was. So you can see expected move 114. We went $11 lower than that here, guys. So I'll be very surprised if it comes down all the way to there, but at least it's in a general area of support, right? That whole $101 range. So looking fairly good on that. We'll see what happens with it tomorrow during the morning session. We also went with the Datadog. We went with Datadog. We got about 34 cents on those contracts right here. We went the 101. So Datadog, same principle. We measure the size of the expected move. And Datadog, you guys know what happened to Fortinet last week. Fortinet last week went down 10% on their earnings. Cloudflare went down 20% on their earnings. So I'm not really taking chances getting too close to the price with Datadog, also a cybersecurity company, right? So Datadog, from our contracts right here, we wrote the 101s. That would be a drop roughly of about 20.5%. That's why we went so low. Datadog, the expected move, I believe, was about 10-11%. So we were about 2 times the standard deviation on that. You can see, yeah, it's about 9%, right? So we went way below that, just maintaining a really safe position here. 101 is close to your 200-day moving average, so could get a reaction from there. All in all, fairly happy with this position too. Now, the next one we wrote is Disney. We wrote the Disney 104s. We got about 24 cents for those. not much, but because Disney just doesn't move that much here, guys. So that would be a move down on Disney of about roughly, let's call it roughly 11% to the downside. And Disney is pricing in roughly half of that. So we did go twice the expected move on Disney as well. You can see the expected move about 6.5%, right down to 108. And we went considerably below that by taking the 104 strike. So we'll see how those play out on Disney tomorrow. We also went with the M-chip semiconductor play as well. You can see, guys, I loaded up on a lot, but we're being very conservative with these, right? So M-chip, we went with this company as well. They reported earnings. They're down about 4.3% in the after hours. They had earnings this afternoon. So on M-chip was one that, similar to some other ones, only have monthly contracts. So wasn't able to get any weeklies on this, but we went with the 82.5. So we got about 0.5%, 40 cents on those. They should be pretty worthless tomorrow, guys. The stock before earnings was trading about $93, and we went pretty much, 82.5s would be 12% below. So we should be well in the clear. The 12% was really in line with this lower bound of support. This is a weekly time frame, guys. Very juicy area of support to be making some plays off. That's why I went with those. And here's my favorite one, guys. We went with Ferrari. So we went with Ferrari, $400 puts, guys. Very, very simple investment thesis, guys. Ferrari is just recession proof. It's kind of like Louis Vuitton at this point, right? Their earnings are supposed to be fairly decent. Now, granted, I did go a little bit close, guys. So this is not that far away. We went with the 400s. It's actually only 6.25% to the downside. Ferrari stock is actually expected to move about 5%. So this could be one where if it comes down too much, we may have to close it at a loss, guys. We'll see what happens. But you can see the expected move about 5%. Down to 406. And I was kind of greedy on this one because I'm expecting good earnings from them. We went with the 400s, right? So it's a little bit close. That's the only position, if you ask me, that I'm a little bit concerned whether or not it's going to drop that much or not. But such a gorgeous company, guys. Their earnings are usually always fantastic. Such a great brand. They're monetizing everything properly. They're doing a lot of aftermarket and custom things, which is bringing in a lot more money than just selling their vehicles upright. They're upselling their clients a lot, and clients are buying it, guys. So looking very decent for Ferrari. We got $2.40 for those, so fairly happy about that trade as of now. And the rest just stands, guys. We still have the Amazon 160 leaps, not touching those. MELI still have that swing trade, and the rest is pretty much unchanged. The three trades that I'm really interested in right now for swing trades, well, obviously big tech, you guys know, Meta, Amazon, Google, Apple, right? Those are no secret. The other ones that I'm very interested in, still MELI, their expansion, guys. Don't fade this. I'm telling you, could be a very nice trade for the next year and a half, 2 years. Such a great growth company at such a cheap valuation. The other one I'm looking at, guys, is Vici for their recovery. Great stock, one of my favorite REITs in the entire game. They're only kind of bogged down because of high interest rates right now, but you're buying the company at a very juicy valuation, and they do pay almost a 6% dividend. One of the strongest REITs in the entire market. They are looking very, very decent for a swing trade as well. And the other one, if you just want a very solid company for your portfolio, SPGI. SPGI has been doing pretty much nothing for the past 4 months, just looking to set the monthly higher low for further trend continuation. Such a boring company, but such a nice dip opportunity with the previous support levels that would be a shame to miss this one as well. So everything looking very, very good, guys. That's pretty much everything that I had for you guys today. Hopefully you appreciated it. If you did, consider dropping a like on the video. Would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new. We do these videos Monday through Friday, every day after the close. And lastly, if you have any questions at all, guys, earnings plays, technical analysis, you want me to look at a stock, macro, you want to take an options play that you want my opinion on, anything you want, leave it down below in the comments, and I'll do my best to get back to you within the first 24 hours. Take care, guys. I'll see you tomorrow after the close. Happy trading and peace.